Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday. And we're at the 23rd of June, 2021, 6 o'clock p.m. What a great day it was for the webinar today. It went perfect. This is the fourth one I've done, and I made a few changes. Let me tell you what we did. I asked people to write in, as you know, their questions earlier. It allowed me to get the charts ready. It meant the speed that I went through everything was like this. Just what you wanted. I was about 18 minutes long. It worked great. We've looked at all the feedback, and Wednesday is going to be the set day for these going forward. So this coming Wednesday, there'll be another one of them. They do open at 12:15, and believe me, I start right at 12:30, and away we go. Nobody had problems of not seeing charts or anything else this time. All the bugs seem to have gotten worked out. You know, the more you do, the better they are. But let's talk about the markets. One of the things we have to look at after the close of business tomorrow is going to be the bank stress tests. Is the Fed going to say to the banks, okay, we went through the pandemic, you kept all these extra reserves, you can get rid of some of them in the way of what? Well, the banks are preparing their plan. Some of them are going to announce on Monday if the bank says, yes, tomorrow afternoon, they're going to do stock buybacks. They're going to increase the dividend. So that should be a boon. Is it in the market? I don't know. Nobody never knows. But, that's not going to go away. What would be not in the market is the Fed coming in and saying the banks didn't do well on the test. I don't believe that's going to be the case in any manner. Iran's talking again about, the U.S. is agreeing to allow them to lift the sanctions on Iran, to allow Iranians to produce the oil. I haven't heard anything in America. Have you seen it on our news? I'm not hearing that. Yet it's on their news, and that's important because it probably means there are things going on behind the scenes. Now, as I told you, when the new Iranian president comes in, I think it's August 1st, it's going to be a different game. What you want to do is everything done so that the current president gets blamed for everything that's wrong, and they can sell that to the Iranian people. The Iranians people are not stupid people. They know what's going on, but you've got to give up Iran, your nuclear ambitions. You're going to have to stop giving money to the Houthis and other rebel groups. If you don't do that, I don't see how this goes anywhere. When you look at the S&P, one thing I've pointed out to you on a weekly area chart of closes, now we're into Thursday already, is that certainly doesn't look bearish to me. When I take a look at this action, I don't know what this is. So if you're asking for my opinion, is this looking at that bullish or bearish? Don't know. Certainly, if you can clear these highs, you'll say, okay, another one of these corrections that we had in the market where the market lifted up from there. When we take a look at how the action is on the swing line, again, no answer. You have a higher high, a lower low. That's not telling me a story. When I look at moving averages, the bias is up because price is staying for a change back over the 18-day average of closes. You had one day where it settled under it. You probed under it. You did the same things back here, and the market came back. I've shown you that each day. On the upside, where I see a cap coming in is 42.60 and a quarter roughly. Why do I say that? Because that's where the upper Bollinger Band is. So you've already gone from the upper band to the lower. Maybe you get back to the upper center line. Who knows where you're at? And when I look at momentum, you're overbought. I truly don't know what to tell you on that chart. I don't feel the same way on the NASDAQ. I'm in the bull camp all the way, both feet. When you embed and you're over these numbers, my goal is the upper Bollinger Band, and on the breaks, and I'm going to repeat it, I think the pros will keep buying on the breaks. If you've taken the enhanced Bollinger Band course on our website, you know that there's a number, a moving average. I tell you that I think they're buying, and they'll look for a combination of a window envelope, which I show in the morning subscriber video, and the upper Bollinger Band. If I put everything on this chart, there'd be too many lines. It makes all the sense in the world if you've taken my courses. When you look at the Dow, You've gone from a higher high to a lower low, challenged the 100-day average, and in the mornings I've been showing traders how that average is so important and how it's held, but you're really not in a trend. All you've done is you got narrow Bollinger Bands right through here. You had a downside breakout. Yes, this has had a breakout to the downside, as did the others. And you'd have to get back over that high, not this one to tell me it's not for real or it failed. Right now, this is a bounce in a market that's had a downside breakout, but it's also not trending. The Russell, downtrend, lower highs, lower lows. It's at a resistance point. The pros, they'd have to have a stop way up over that high. I think it's too big for them. It's a couple of $1,000s. I think it's too much money. I think you're more or less still stuck between there and here. Got that? And we talked about that before. VIX, I think the short covering all hit today. More than that, I think the pros went into this market and wrote puts galore, looking for the market to get right back to the 18-day average of closes. Let's see if I'm right or wrong. You take a look. When is the last time you hit that lower band? You got to go back to April, and it's had a history of doing just what I'm telling you. So that's another thing. Is that friendly to the stock market? Not if it's going to work. You're going to get a little bounce. But it's so close to the market, 1726 from where you're at. It's not even a full point away. You can get there on an intraday correction. In the T-bond market, you're getting your correction out of overbought, and you have not lost your way in the market. To lose your way, you've got to take out 159 and 8/32. What that would do is that would give you then lower highs and a lower low. Anytime you hit that, so 159.7 does it. Then I think you're going back to 158.17, but you'd have a downtrend. Any close under that would be even more bearish, looking for even further declines in the market. When we come to the 10-year note, you've been in a downtrend. You've got the lower highs, you have the lower lows, so that's bearish. The market closed today under the 18-day average, confirming bias down, trend down, but let's assume you go short. What do you do about this 100-day average? That's why I don't think anybody's jumping on this bandwagon just yet. It's a hard one to jump on. If you get under 13200, that could give you the opening to get down to 131.17. So that's what I'm saying. I think the bears have control of the market for the moment, and we'll see what goes on there. In the dollar index, you had 3 days up and over the upper Bollinger Band. You failed on the fourth. You've corrected. In the momentum part of it, we're not open yet, remember that. You lost the embedded reading. Yesterday I pointed out to you, yesterday you had 3 days in a row where the red and the blue were over 80. But I told you, you're at the bottom part of that range. Be careful. The way the market goes in the math of this, if you don't jump immediately, and I mean immediately, you're going to lose that embedded reading. The market opened steady, barely moved, and fell back. Just the fact that you drop down there, the way the market averages, it's not looking here. It's going to look at the range. If you understand the formula, you lost the reading. Can you get it back? Tomorrow. It's the only day you can get it back after you lose it. So if you get another strong move, you've got to look to see, does that pick you up over 80? Then the target's here. Let's assume that doesn't happen. It's a two-way street in this right now. Then you're probably targeting 91.08 and a half, going back to that number. In the eurocurrency, whatever the dollar does, this is the other side of it. So this market's been coming up, and you can see your numbers over 20. So you have an oversold market in a downtrend that is not embedded. Not a lot to do in that. British pound, as we got up yesterday, and I'll remove this, I said, okay, here's where you're at. If the market's going to go higher, the next resistance is here. You're oversold. I don't think oversold conditions attract new selling. You had your bounce, a little bit of it, and that's still what you're doing. Okay? But now what's happening? Now you're starting to leave that oversold area. So the game changes. I think the bears will be looking at this market. I think they'd like to sell it higher, because if you sell it here, what was resistance on you on the way back up becomes support on the way down in that green line. In Bitcoin, I I was watching the press, and they're all going, it's $10,000 coming in Bitcoin. Let me tell you, the odds of staying under that lower Bollinger Band off this formation, not very strong, 5% of the time. So you're bouncing. I'd like to see the market, if you want to talk 10,000, get on top of that Bollinger Band, not leave it. It's what we call that gorilla glue trade, and then get these numbers to embed. That would be the way. Right here, I'll let somebody else play it. I don't care if it goes up or goes down. The differential between Brent and U.S. Crude, there's a couple of things happening. We have the OPEC meeting going to happen the first week of July, I understand. So as they get ready for that with $75 oil, there's a lot of pressure, and this is Brent that I want to go to. There's a lot of pressure coming on OPEC. How high are you going to let this go? You're causing world inflation, blah, blah, blah. Well, they're filling their coffers, or what they're doing, and they were underpaying for a long period of time. It's their oil. But I do think you're up in a resistance zone. However, when you have an embedded reading, which you have, what do I think the pros will do? As long as you don't take out that 7,600 made today on the first reasonable break, take the enhanced Bollinger Band course, I think they'll buy the market. They'll get out if the red line closes under 80. In the WTI crude, the market, as you can see right here, lost the embedded reading. No, it kept it. Now it came back up, went up for the upper Bollinger Band, same story. Until it's lost, I think these pros are buying this market on the break until they have a reason not to. Right in front of the OPEC meeting, things will probably change because nobody's certain what goes on. Gasoline, new high for the whole move. So I started off with you in, was it May? And I said this is going to be one of those years where gasoline prices are just going to keep cranking out into the summer, higher numbers, because everybody in America is going to drive. And look at your gasoline prices. You don't have to believe me. They're telling you the demand for this. We saw a big reduction today in the EIA and API last night stocks of crude, but both are showing that you're not drawing down very much. You're building a little in some of the distillates and gasoline. So you put it all together, it's fun, and for me the fun is educating you in the morning. Now let me tell you what I did. A couple of years ago, I decided to come up with this idea on a lark. And I said, I'll bet my clients, new subscribers, paying people to me, want to see what I think of the market before the markets get really going. They don't want to sit there and they're watching CNN, all of the different stations in the morning. They want to hear about what reports are coming out, if that report, when it's coming out, what's the expectation, what did it do, what's the chart looking like with it, and are there world events I should know about in a quick format. So every morning I start off my morning video with the news, and I'll bring you the news on all the futures markets right away. I cover all these markets very quickly. It is a 15 to 20 minute video, but I'm going to do them in that sequence that you just saw, and it's inexpensive. That is the goal of this. This is meant to educate you, get you going. I'll throw I want you to buy here. I want you to sell there. This is where I'm wrong. Oh, that trade didn't work. Look at it. Here's what it did. You can track me. I think you'll see I'm okay at what I do. What okay means, I try not to get stepped on real hard, and I try to do better than I do worse. Is that fair enough? There's disclaimers. I got to be very careful with what I say, and I'm not implying they win or lose. I am saying I think you'll find my years of knowledge helpful. How do you get to it? Well, first thing, $7.95. Second, you don't have to follow a word I say. That's the beauty of it. I'm not asking you for a managed account or anything. See if you like it. People that do, they write to me. Take a look at the comments on the website. That's from them, not me. I'm Ira Epstein. All you need to do is go to our website under the word research. Give it a try. Take care.